Central Bank's bi-monthly Monetary Policy Committee meeting was held this afternoon against a backdrop of sustained macroeconomic stability, increased optimism on the economic growth prospects, an improving business environment, and continued strengthening of the global economy. CBK Governor Dr. Njoroge says over the period, non-food, non-fuel inflation remained below 5%, demonstrating that demand-driven inflationary pressures remained muted. And although the rise in international oil prices is expected to exert moderate upward pressure, the MPC noted that overall inflation is expected to remain well anchored and within the government target range in the near term. At the same time, private sector credit further grew by 2.4% in the 12 months to December last year, slightly higher than the 2% recorded in October. With increased optimism for growth prospects in the economy this year, the MPC has retained the key lending rate at 10%. CBK Governor Dr. Njoroge, however, says there's some room for accommodative monetary policy in the near term, as well as the risk of perverse outcomes. He further notes that the MPC will continue to monitor the impact of the interest rate caps on the effective transmission of monetary policy, as well as closely monitor developments in the global and domestic economy, and stands ready to take additional measures as necessary. According to the MPC, the economy is expected to pick up strongly in 2018, supported by a stable macroeconomic environment, a resurgent private sector, recovery in agriculture, and sustained public investments in infrastructure. The current account deficit is further expected to narrow to 5.4% of GDP this year, largely due to lower imports of food, lower imports in the second phase of the SGR project, steady growth in tea and horticulture exports, strong diaspora remittances, and continued growth in receipts from tourism.